Hello everyone, my name is Jeffrey Kennedy, and the first market we're going to take a look at this month will be the coffee market. And big picture, little's really changed, but let me go ahead and walk you through each of the price charts to kind of give you your bearings for this market. Now, as you can see here, I'm actually working a very long-term wave count that actually began at the 1977 peak. I'm looking at this move to the downside, to the low that we saw back in 2001 as a fourth wave move. The subsequent advance, which actually coincided with the secular commodity bull market that began in 2000 and terminated in 2010. So that move up actually represents our fifth wave. Now we do have a bit of a truncation here because this fifth wave really didn't terminate, say, much higher than the prior swing highs or historical highs we actually have seen in this market. So really what I'm currently focused on right now moving forward is the down phase of the secular commodity bear market that we're currently in that began in 2010, and it's not scheduled to end or terminate until, say, 2030. So this is why I'm looking down in this large WXY, this complex correction moving forward. Now, as far as the first part of the correction, wave W, I think it is a straightforward zigzag. So I'll be looking for this complex correction, that very large degree fourth wave move, to actually take this one right here to take the shape of a double zigzag. Okay, so within this 5-3-5 pattern, we have 5 waves down off the 2011 high, terminated in 2013. Then we have our wave B price move, and then subsequent price action, as you can see, has been very laborious, very overlapping, and it's beginning to take, or it has for quite some time actually, taken the shape of a very popular pattern that Elliotticians refer to as an ending diagonal. Now, an ending diagonal is a terminating wave pattern that can only occur in the fifth wave position of an impulse wave or as wave C of either a zigzag or a flat. Now again, the operative pattern, the operative corrective structure off the 2011 peak is that of a zigzag. This is a 5-3-5 pattern, and our ending diagonal, our C wave, actually began in 2014. Now, as you well know, if you've been a subscriber for any length of time, I actually thought the pattern terminated in 2019. And the price action we saw to the upside that in the fourth quarter of 2019 was actually quite exciting and actually quite encouraging. But since then, and certainly considering this year's price action in many markets, we actually saw a reversal. So what I actually would like to see in the coffee market moving forward is further decline to below 87.60 that would finish up the pattern and actually set the stage for a significant sizable move to the upside in the coffee market, simply put, in which I expect coffee prices to more than double. So as we move into, say, 2022, I don't think we're going to be trading, 175. I think it's going to be more along the lines of, say, 200 or 225. That's the kind of move I'm going to be looking for moving forward in the coffee market. Now, as far as the shorter term structure, this is what we're looking at basis the September contract, where we have waves A, B, and I would like to see one more round of decline in the coffee market to below the lows that we saw back in June, put some pressure on this 90 to 85 handle. That would give us our final move of the structure, and then at that point we would have a completed pattern in place, and then it's just going to be waiting for some confirming price action to really solidify this view. Now this week we did see a bit of a pop to the upside. Now we need to keep an eye on this, say, short-term strength moving forward. Now currently I simply view this move up as a fourth wave move within a larger unfolding 5-wave decline. But as we move into the remainder of this week and into next week and maybe that first week in August, if this market, if September coffee really begins to move beyond that 115 or that 120 area, then I think at that point, only if that occurs, so if we're trading 115, 120, I think we could make a case, a compelling case, that our diagonal in coffee is done. In other words, the low of the year, well, the low that we just put in June is not only going to be the low for coffee prices for this year, but for the next, say, 1 to 3 years, in which case we would be looking or utilizing this interpretation right here, where we have waves 1, 2, and beginning to work wave 3 to the upside. Okay, so keep an eye on this market. I think over the next 1 to 3 weeks, this is very important.